Well, hello everyone, and welcome to Momentum Channel. My name is Mo, and today we're going to be talking about our Smith Maneuver portfolio that we have with Questrade. For those of you who are not familiar, the Smith Maneuver is a legal technique that investors, particularly those in Canada, can use to convert the mortgage into a tax-deductible, funds. And the way to do it is by having established the right type of mortgage, and from there on, using those equity in your home and borrowing it to then invest, whether it's investing in the stock market or real estate or other eligible type of investments for that matter. And these type of videos, we provide an update on our journey, the way that we are pursuing the Smith Maneuver and how we are using that funds to invest in the stock market. We're going to talk about that, specifically provide you an update on where our portfolio is and what type of holdings we have in our Questrade portfolio. So let's get into it. All right. For those of you who followed our previous update, you know that in our Smith Manoeuvre portfolio, we decided we're going to go and buy one and only one holding. And this is the one that we've kind of landed on after extensive research. And the one we landed on is a product by Vanguard with ticker symbol VEQT, which gives you 100% exposure to the stock market. So it's a little more aggressive in that sense, but it is an all-in-one ETF, which means that this ETF itself consists of 4 other underlying ETFs within it. And each ETF or exchange traded fund, for those of you who might not be familiar, it's a basket of multiple stocks underneath that, giving you much more diversification, lowering your risk, and at the same time expanding your exposure to different geographies, different sectors, and all of that to be done at a minimal cost and at so much ease and without having to do much research. Good news for you, we've done a ton of research, and the VEQT is the one we landed on. A few days ago, we earned a dividend from VEQT. VEQT does pay its dividend or distributions on an annual basis, and it was paid a few days ago. And we had signed up for a DRIP, which is a Dividend Reinvestment Plan, allowing us actually to take advantage of our dividend income or distribution to be automatically reinvested as much as possible to buy full shares of VEQT automatically. And in this case, you notice here from the screen that we had bought 1,200 shares of VEQT before the ex-dividend date, and those as a result were subject to earning our dividend income. Each share of VEQT gave us roughly 51 cents in distributions, which resulted in $616.98 Canadian as the dividend or distribution income. Then, given that we were enrolled for the dividend reinvestment plan, the amount was used to buy us 17 shares of VEQT for a total of $609.84. These shares were bought at the price of $35.87, roughly, as you notice here, which was quite nice to see that additional 17 shares added to our positions. This is a longer term portfolio for us. The intention is to grow this into a much bigger portfolio, hopefully one that we could rely on as for early retirement package and portfolio. Anyway, let's get into the specifics and talk to you about how much holdings we have currently, because since then we've actually added to our existing shares. All right, here's a quick look into this portfolio. You'd notice here the total balance of this account, which consists of some cash as well as the equity portion of it. In terms of the equity, we are only invested in VEQT. Since our last update, we definitely bought more shares of VEQT. We currently have 1,665 shares, and our average purchase price is at $36.66. Given the last cost or closing price for VEQT, which was at $36.44, our account is currently down by roughly $370 unrealized loss, or down about 0.6%. Looking at the return for VEQT, the one-day return is up by 0.61%. The 5-day return or week return is negative 1.5%. 0.5% roughly. The 1 month return for VEQT is at negative 1.41%. The 3 months return is at positive 3.52%. 6 months return is at 3.17%. And 1 year return currently is at roughly 13.7%. For those of you who might not be familiar, I'm going to provide a quick review of VEQT, what it is, what its costs are, and how you get invested and exposed to stock market by investing through VEQT. You notice it is all-equity ETF portfolio. VEQT by Vanguard has a management expense ratio of 0.24%, which means if you invest $10,000 with Vanguard through this ETF, your fee would be $24 in 1 year. The distribution is paid on an annual basis and currently has a yield of 1.27%. Looking at the exposure, 100% of your exposure is to the stocks, and that means roughly you have 13,480, or to be exact, 486 different stocks that you get exposure to. A majority of them are large cap companies. More specifically, close to 80% of your exposure is to large cap companies, and followed by medium size at 8.68, and then 5% or so of your exposure is to small size companies. In terms of the underlying assets, this one ETF consists of 4 different ETFs underneath that. These underlying assets include US Total Market Index ETF, FTSE Canada All Cap Index ETF, FTSE Developed All Cap excluding North America Index ETF, and FTSE Emerging Markets All Cap Index ETF. All of them are index ETFs. Looking at the geographic exposure, the majority of exposure is to US with 43.7%, followed by Canada at 30%, Japan at 4.5%, UK at 2.7%, and China at 2.6%. And the top 10 geographic areas account for close to 91% of your exposure geographically. Lastly, if you look at the exposure by sectors, the largest exposure is to technology with 20.2%, followed by financials at 19.2%, and consumer discretionary with 12.8%. The breakdown is provided here for your reference as well. There you have it, folks. A quick look into our Smith Manoeuvre portfolio that we have here with Questrade, and how it's been growing and how we've actually been able to reinvest our dividends automatically using the dividend reinvestment plan that we are enrolled in. Let me know if you have any question about this portfolio or about the Smith Manoeuvre investment whatsoever. I would be happy to share what I've learned along the way. And if you have any question, try to find you the right resource and connect you to the right resources. I hope you found this video beneficial and gained something of value from it. If you did, don't forget to give this video a thumbs up and share it with someone who might benefit from the video as well. And of course, I'd love to hear from you and have you join us on our journey. So don't forget to subscribe to our channel for more investing videos as well as ways to reach financial freedom. Thank you, and I hope to see you next time.